At Sterling & Law, we understand the complexities of investment risk and the opportunities it presents. But what is investment risk? And how could you make the most out of it? What is considered risky is different from person to person. Some people enjoy skydiving, while others could think of nothing worse. The same is true for investments. Risk is linked to most types of investments. These are called asset classes. There are four main asset classes: cash, fixed income or bonds, alternatives, and equities or shares. Cash or money on deposit at a bank is considered the lowest risk investment. It also has the lowest potential return. Cash, however, isn't entirely risk-free because it could be subject to the bank going bust. And with such low returns, cash has little chance of keeping pace with inflation. Bonds provide a fixed rate of income in return for lending money to a government or company. They are generally perceived to be less risky than shares. Alternatives are just that, anything that isn't cash, bonds, or equities. Equities or shares are generally considered to be the riskiest of the asset classes. They offer no guarantees, and your return is subject to the performance of the companies you are invested in. History suggests, however, that investing in shares is the most reliable way to grow your savings and beat inflation over the long term. Company shares or equities and the various asset classes mentioned earlier are diverse, and so they have different levels of risk and reward. While a small startup may have higher potential for growth, it's likely to be more unpredictable than a household brand seeing a steady demand for its product. So instead of relying on the success of one company or asset class, it would make sense to spread your investment across a mix of companies, asset classes, and geographic locations. This strategy of diversifying could give you growth potential with reduced risk. At Sterling & Law, we outsource the picking and choosing of investments to experts in their field. While long-term investment strategies aren't as exciting as shorter-term ones, they tend to be much less risky and potentially more profitable. It's safe to say everyone has their own attitude to risk. That's why your Sterling & Law financial planner will help you understand what level of risk is right for you and your investment. Remember, think long-term for best results. With that taken care of, your financial planner can concentrate on financial planning. The value of investments and the income derived from them may go down as well as up and is not guaranteed. Therefore, investors may not get back the amount originally invested.